Good morning, everyone. Welcome to this session on Ind AS 101, that is first time adoption of Indian accounting standards. Okay. So, broadly speaking, this is a culmination of whatever you have studied so far. When I say culmination, what I mean? I basically mean that you already know all the Ind ASs. At least you are familiar with the terms, with the calculation methodologies, with the change in which you are, with the change you have witnessed as compared to the accounting standard regime, with the changes that are there in terms of accounting treatment, in terms of measurements, in terms of presentation, in terms of new items added, like you have uh, investment property which was not there as a separate standard earlier, or agricultural items which was not there earlier, or new remeasurement principles like equity at fair value, always investment in equity at fair value, or it could be even the treatment of share based payments at fair value as compared to intrinsic value which was followed earlier, etc., etc. So there are a lot of gaps or a lot of changes in the way the financial reporting has been updated from the accounting standard regime to the Ind AS regime. Now, all of you are aware of this. What Ind AS 101 does is, it is basically putting all the transition provisions at one place. That is what Ind AS 101 deals with. So this is obviously coming from the parent standard, that is IFRS 1. So Ind AS 101 is an offset of that. And we are now going to discuss an entity that is required to move to Ind AS, either mandatorily because probably its securities are getting listed on the stock exchange. The listed entities have already moved or transitioned to Ind AS. So any entity which is in the process of getting listed has to mandatorily follow Ind AS. Or if your net worth exceeds 250 crores, that is the criteria right now. So from that perspective, you are having this standard largely applicable in a practical scenario. So this is what it looks like. And when the last phase of adoption sets in, at that point of time, the standard will gain a very high importance. Okay. So now, from an examination perspective, it is a standard that has been reasonably asked. It's not very frequently asked, but it has been coming on and off in the examination. So, from an examination perspective, also, you can place it among one of the kind of important standards. Okay. Now, when I say Ind AS 101, you will obviously be required to have a knowledge of two things. One is, what is the treatment under the earlier accounting standard regime? What is the treatment under Ind AS respective, and how does Ind AS 101 facilitate the transition? How Ind AS 101 facilitate the the transition. So I have an item that is covered under accounting standards. Okay. I have a same item that is also covered under Indian accounting standards. Now, the issue is, if Ind AS 101 does not exist, how would you do the transition? If there was no first time adoption standard, how would you do the transition? Sir, we would obviously be doing the transition as if we are applying Indian accounting standards right from the inception of this item. Right from the inception of this item. Like, for example, if we talk about an item like investment in equity, if we talk about an item like investment in equity shares, or if we talk about the revenue recognition standard, then Ind AS 109 requires fair valuation of equity instruments. Fair enough? So fair value investment in equity. This was mandatory. I hope you are able to connect. How was the treatment of this investment in equity shares? Under accounting standard, sir, it was a long-term investment, so that would be at cost. Less any permanent diminution in value. Permanent diminution in value. So you are having this particular scenario that is there. Now, if Ind AS 101 was not there, I would apply this right from the very beginning and calculate all the fair value movements and take it to the retained earnings. We'll come to the specific transition cases shortly. Okay. But just to give you an idea, Ind AS 101 was not there. Then at that point of time, you will have to go right from the time when you acquired this investment in equity shares, do the fair valuation for each of the periods, and then once you do the fair valuation for each of the periods, all the accumulated movements, you would probably take it under your retained earnings. Ind AS 101 says, we can give you some kind of a relaxation. So what Ind AS 101 does is, it is actually making your life easy on account of first time adoption. Basically, there is a great amount of fear that is there when entities move towards Ind AS 101. When entities move towards Ind AS. Ind AS 101 says, you can take proxy values, you can take surrogate values, you can take substitute values and do the accounting. Like for example, let us take another example. Now the accounting standard also has been modified, but I'm just going back to pre-modification of the accounting standard. We had a standard called AS10 that dealt with depreciation. AS10 में क्या होता था? You used to capitalize the cost and depreciate it over the useful life. There was earlier, prior to amendments in AS10, there was no concept of provision for decommissioning and restoration liabilities. वो ऐसा provision था नहीं वहां पे. There was no concept of discounting the provision to the present value, capitalizing it in the cost of the asset, and then doing the discount and then doing the depreciation. However, Ind AS 16 read with Ind AS 37. Are you aware of these provisions? Yes. Suppose I set up an oil rig in the ocean. Then because I have set up the oil rig, I would have damaged the ocean bed. And because I have damaged the ocean bed, I already have this onus or responsibility cast upon me to restore that ocean bed after I have completed the extraction of the oil. And therefore, this is giving rise to a liability right from the time I made my first drilling in the ocean bed. This is an obligation I cannot escape. This is a compulsory obligation that I am carrying. And therefore, what Ind AS 16 read with 37 says is, you make a provision, recognize a provision right at the time of capitalizing the asset. Correct? What value do I provide? Sir, I will take it at the present value, because you presume you will, extract the oil for a period of 10 years. So the cost after 10 years, you will discount it to the present value, capitalize it in the cost of the asset, and then depreciate it. So AS10, no provision for decommissioning. Ind AS 16 allows you or mandates you to go ahead for a provision. Now let us take a case of an entity that had put an oil rig somewhere about 4 years back. Today it is transitioning into Ind AS, and henceforth Ind AS provisions will be applicable. So if 101 was not there, you would have to go way back in time 4 years ago. You would have to estimate the provision that was there at that point of time, discount it to that value, then unwind the discount for 4 years. That will give you the opening value of your provision. And then moving forward, you will capitalize that and take it to your asset value and depreciate it over the remaining tenure. This is how you would have done it. But in reality, Ind AS 101 gives you a substitute. Ind AS 101 allows you to go for something known as a deemed cost. So all these things, all these factors is what we are going to study. All these factors is what we are going to study. This standard is extremely important from a practical perspective. So if at all you have done first time adoption of Ind AS, you have prepared the Ind AS financials, and you have or you have done the audit of a company that has transitioned to Ind AS, then for you people, yes, you would be aware of it. Or if you are not aware, then you can now get aware, and probably you can experience the Ind AS transition on some of your clients if at all they are undergoing it. Okay, so with this background, let us start our formal topic with all the provisions relating to Ind AS 101. Is it okay? So everything is fine here? Yeah, any doubts, any queries? Yeah, good morning, Dev, good morning, Satish, good morning, Shruti, Shailesh, Deepak, Namrata, good morning. Yes, okay. So now let us start. Okay. All right. So what does Ind AS 101 start with? Okay, there are a couple of important definitions that we have. So first one is first Ind AS financial statements. First Ind AS financial statements. Okay. So now, what do you understand by the first Ind AS financial statements definition? Okay, so first Ind AS financial statements is basically statements where the entity adopts Ind AS, statements where the entity adopts Ind AS through an explicit and unreserved statement of compliance with Ind AS. With Ind AS. Okay, so this is the meaning of the first Ind AS financial statements. First Ind AS financial statements, statements where the entity has adopted Ind AS, and that adoption has happened through an explicit and unreserved statement of compliance. What do you mean by explicit and unreserved statement of compliance? Explicit and unreserved statement of compliance means in the financial statements, the management will say that we have adopted or moved to the Ind AS regime, and we have complied with the provisions of all the Indian accounting standards that are applicable to us. तो इसमें बड़ी बात क्या है? What is the big thing about this? वो तो everybody will give. What is the big thing in this? नहीं, this is a very important statement. This is a very important statement because you are not subjecting yourself to any reservation or to any what you can say ambiguity. You are not saying we have complied all the provisions of Ind AS except financial instruments, for example. You cannot do that. You have to give a compliance, an unreserved and explicit statement. You have to be as open, transparent, and clear that these financial statements are fully compliant with Ind AS. And these are the financial statements where I have transitioned to Ind AS. This is the very first key statement that you have to make. And those financial statements will be regarded as the first Ind AS financial statements. Okay. Now, who will give this explicit and unreserved statement of compliance? That the management will give. Now, let me tell you, let me ask you rather, let me ask you, suppose, okay, management gives the statement. Okay, explicit and unreserved statement. वो दे देता है. He gives it gives the explicit and unreserved statement in the first financial statements. Auditor is performing the audit of Ind AS financial statements. Okay. Suppose there was a business combination in the year of transition. So you had to do a fair valuation of all the assets, liabilities at the time of transition and consider that. That you did not do. That you did not do. So auditor, what will the auditor do? If you have not complied with the provision of an accounting standard, what will the auditor do? Okay, come on, tell me. You people have studied audit also, I presume. Yes. So all transactions are complied, all Ind ASs are complied, except that Ind AS 103, which requires fair valuation of assets and liabilities of the target entity, that fair valuation exercise has not been performed. So now my question to you is, what will the auditor do in his financials, in his audit report? What will the auditor do in his audit report? The management has given the explicit and unreserved statement that we have complied with all Ind AS. Auditor is saying there is no compliance with Ind AS 103 fair valuation exercise. What should the auditor do? On one hand, he is having the management statement. On the other hand, he is having a treatment which is not in line with Ind AS 103. So there are two conflicting things that the auditor is facing. Okay, there are two conflicting things. One is management statement, and on the other hand, there is a non-compliance with Ind AS. So what will the auditor do? Well, obviously, that's right, Namrata. The auditor is going to give a modified opinion. Depending on the materiality, the pervasiveness, he could probably issue a qualified opinion or he could issue an adverse opinion, whatever be the case. Okay. So now he will say that, okay, subject to non-compliance with Ind AS 103 provisions, the entity has complied and these become the Ind AS 101 first financial statements. Entity has complied with the Ind AS subject to this particular non-compliance. If you had to comply, what would be the scenarios? That you will be mentioning it in the audit report. That you would be mentioning. So there will be a qualification in the auditor's report. So qualify. So qualify the audit report. Okay. Obviously, as important as it is for management to give the explicit and unreserved statement, the auditor has an equally onerous task to ensure that all the Ind ASs are complied with. If that does not happen, then auditor also would not have done his job. Now my question to you is, there is this scenario. Management says explicit and unreserved statement, but auditor says the audit report is modified because of non-compliance. My question to you is, put yourself in the shoes of the management and ask yourself, are you right in making this statement? And then put yourself in the shoes of the auditor and ask, are you right in issuing a modified opinion? And finally, put yourself in the shoes of the investor and answer, investor or reader of financial statements. Are both of them correct in this regard? So, pehla, put yourself in management shoes and answer the question, sir, I am making an explicit and unreserved statement. Do you think that to be correct? Management perspective only. I am not saying you to think from the perspective of the auditor. Okay. Put yourself in the management shoes and think, is this explicit and unreserved statement acceptable from a management perspective? Come on. There is a non-compliance. I know that. Forget that for the time being. Non-compliance is detected by the auditor. Management says, भाई हमने तो कर दिया है. Yes. Come on, tell me. Remove the hat of an auditor. Think from the management. Yes. 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 So the management statement, I'm not talking about the auditor's perspective here. I'm talking only from the management perspective. Okay, management, see, how does the audit happen? The management will prepare the financial statements, give this explicit and unreserved statement, and submit them to the auditor for the audit. So therefore, as far as management is concerned, this is okay. Now coming to the auditor's position, is the auditor correct in issuing a modified opinion because he has detected through his audit procedures that Ind AS 103 fair valuation of assets and liabilities has not been carried out? Auditor feels that though it may not have a very pervasive impact, but definitely there is a non-compliance, and therefore probably the assets and liabilities are not fair valued. So therefore, there could be an overstatement or understatement of goodwill or capital reserve, as the case may be. So now the question is, from the auditor's perspective, is the auditor right in issuing a modified opinion? Or should the auditor say, I cannot issue a modified opinion because the management has given an explicit and unreserved statement? What do you think? What do you think? The auditor is right. The auditor is right in issuing the is right in issuing the modified opinion. Yes or no? Everybody, are you convinced? Yes. Are you convinced that the auditor is right in issuing the qualified opinion or modified opinion? Yes. ऑडिटर ऑल्सो इज राइट. सर ये तो मतलब अजीब हो गया ना, आप एक तरफ बोल रहे हो मैनेजमेंट भी राइट है, अनदर साइड यू आर सेइंग ऑडिटर ऑल्सो इज करेक्ट. सर ठीक ठीक बोलो ना, वो ठीक नहीं लग रहा है, दोनों कैसे ठीक हो सकते हैं? दैट इज व्हाट इज द थर्ड क्वेश्चन. नाउ यू आर द रीडर ऑफ फाइनेंशियल स्टेटमेंट्स. You may be the shareholder, you may be the employee, you may be some analyst, you may be any XYZ person who reads and gets impacted by this decision, who reads and gets impacted by the financial statements. Now put yourself in the feet or wear the hat of the reader of financial statements. Reader of financial statements. Yes. Now you ask yourself, you are the reader of financial statements. Now my question to you is, should the reader accept the explicit and unreserved statement of the management and say that these are the first Ind AS financial statements, or will that conclusion be affected because of the auditor's modified opinion? I repeat my question. Will the reader of financial statements express or accept the conclusion that this is the first Ind AS financial statements and they accept the explicit and unreserved statement? Or can the reader of financial statements say, sir, ये financial statement ही ठीक नहीं है, these financial statements are not right because auditor has issued a modified opinion? Can the reader of financial statements do that? Yes. My basic question to you is, so the nutshell of this discussion is, the reader of financial statements has these two things. My question to you is, can these two things exist together. Can both of them exist together? Sir, means what? Management says we have complied, auditor says we have not, you have not complied and modified. So my question to you is, can both these things exist together in the financial statements? That is the ultimate question. That is the ultimate question. Can both these things exist together? Yeah. Management's explicit unreserved statement on one side, auditor's qualified report on the other side. Can both of them exist together and be presented as the Ind AS financial statements? Okay, I'm waiting for more answers. Okay. Okay, so Deepak, Shruti, Mansha. What about the others? Today Shankar is not there. Yadu is not there. Okay, Namrata, what do you think? Dev, what do you think? Manoj, good morning. What do you think? Can both exist or both cannot exist? Both can exist. The answer is both these things can exist. For example, just tell me one thing. A going concern status, forget Ind AS 101, blah, 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 everything you forget. You take a company whose net worth is negative. You take a company whose net worth is negative. The management believes that the entity is a going concern. And therefore, it prepares the financial statements under the going concern assumption. Auditor does the audit, SA 570, going concern, and he has reason to believe that the going concern status is inappropriate. Okay, there exists a material uncertainty over the entity to continue its operations. This is what the auditor believes. Now you tell me, the management has prepared the financials on going concern assumption. The other side, the auditor is saying going concern is inappropriate. So are both these things existing together or not? It is a different opinion. It is a different judgmental call that is being taken. Management says, "Hum chalenge aage." Auditor says, "Kaise chaloge?" I believe that, or we believe that there exists a material uncertainty as far as the entity's continuance in the future is there. Yes. So therefore, both these things exist in the same financial statements. That is why the auditor's job is important, right? The management will tell XYZ things. The auditor's job is to ensure that those XYZ are correct or at least true and fair, or at least true and fair. So both of them exist together. Management's going concern financial statements plus auditors modified audit report, or it could even be adverse if the going concern is so pervasive. So both these things can exist together. Then the investor or the readers will take a call about the entity. But as of now, yes, both can exist together. Similarly, in this case, the management giving an explicit and unreserved statement also can be there. And in the same financial statements, the auditor's qualification of the audit report saying that a particular provision of Ind AS is not complied, that can also exist. That can also exist. And therefore, it's perfectly normal for both these contrary opinions to exist in the same annual report of the entity. But for the purpose of Ind AS, will you then call it as first time adopted financial statements, or will you say these will not be the first time adopted financial statements? So now the last question is, the reader of financial statements Will he say that these are statements on first time adoption, or will he say not first time statements? What do you think the reader of financial statements will interpret out of this? Will the reader interpret that this is the first time adopted financial statements, or will the reader demand that these are not first time statements, you please prepare all over again? What do you think? सोच समझ के जवाब दो. These financial statements will be regarded by the reader of financial statements as the first Ind AS financial statements only, regardless of what is mentioned in the auditor's report. Don't be confused by the fact that the auditor is issuing a modification or a qualification in his audit report. भाई वो उसका काम है. That is his job. What is the management's role? What is the management's role? Management's role is prepare the financial statements, give an explicit unreserved finance and an explicit and unreserved statement, comply with Ind AS, issue the financial statements. Auditor's job is to check it. वो तो उसका काम हो गया. That is his pervasive. That is his area of expertise. Forget the auditor. Management and reader. उन दोनों के बीच का look at the relationship between both of them. Management's job is to prepare. It has prepared. Management's job is to give an explicit and unreserved statement. It has given. So for the reader, there is no option but to accept it as first Ind AS financial statements. The reader can question the management. How are you doing it? Because there is a qualification. But the reader has no option to say that these are not the first Ind AS financial statements because the management has made an explicit and unreserved statement of compliance. So whatever be the auditor's opinion, please set that aside. And this will be your first Ind AS financial statements. So auditor qualify kar sakta hai. Auditor can issue a qualified opinion. Auditor can issue an adverse opinion saying that there is no compliance with Ind AS. Auditor can do anything and everything because auditors are supposed to be independent. Auditors are supposed to be independent. But as far as the management and the reader of financial statements are concerned, these are the first Ind AS financial statements because this is the first time you are seeing the financial statements under Ind AS. Plus, there is an explicit and unreserved statement. So to that extent, the auditor's opinion, the auditor's judgment, they become irrelevant. They become irrelevant. You cannot say that just because auditor has qualified, these will not be the first Ind AS financial statements. These are the first Ind AS financial statements. Are we okay? Yes. Have you understood this? Yes. You have to think only from management perspective. What is the name of this subject, by the by? सब्जेक्ट का नाम बता दो. Think of the name of this subject. What is the name of this subject? Please write that in your आंसर बॉक्स. जो आप पढ़ रहे हो, पढ़ चुके हो, ये सब्जेक्ट का नाम क्या है? Don't hesitate. I'm not mocking you. आप नाम लिखोगे, you will never make a mistake. This is financial reporting. इसमें audit मत डालो. Don't put audit into this. The next paper that you have, advanced auditing and professional ethics. In that paper, you are at complete liberty to question, argue, fight, figuratively, not literally. Yes, you are at liberty to do anything and everything in the advanced auditing and professional ethics. So therefore, forget that and look only at the reporting. ये सिर्फ और सिर्फ reporting की बात है, nothing else. Okay? Doesn't matter whether auditor has issued an adverse opinion. Doesn't matter whether auditor says I have not received sufficient appropriate audit evidence, so I cannot comment on the financial statements. I don't care as the management. Okay? And you should also not bother as the reader for this temporary purpose of saying that these are first Ind AS financial statements. I'm not saying auditor को पूरा ignore करो. No, I'm not saying that. I'm saying solely for Ind AS 101, this is your first Ind AS financial statements. बाद में readers definitely will question. I'm not denying that. Readers will definitely question. But that questioning moves out of the purview of financial reporting and then it takes the color of auditing and all the related compliance issues. Okay? हमारे लिए अभी वो सब नहीं चाहिए. We don't want all of that. We just want to say management prepared financial statements. Management gives explicit unreserved statement of compliance. This becomes the first Ind AS financial statements. That's it. You look only at these two things. Don't look at this. Don't look at this for the limited purpose. Is it okay? Yes? All right. So that takes care of the first definition. First Ind AS financial statements. Until the management gives or as long as the first Ind AS financial statements do not contain the explicit and unreserved statement of compliance, this will not become the first Ind AS financial statements. So see, management has a very huge responsibility. देखो, example के लिए I have taken this. But are you able to understand the seriousness of this statement? Explicit and unreserved statement of compliance. Are you able to comprehend the statement of this? Basically, what you have to do is you have to go para by para of all the Ind ASs and ensure that they have been complied with. This is the onus which is put upon the management. Are you able to understand? If the explicit and unreserved statement of compliance is not there, this cannot be the first Ind AS financial statements because management has to, I repeat once again, management has to give an explicit and unreserved statement of compliance. This is not a kind of a, आपको पता है when you download some app or game or whatever it is, terms and conditions, there is one star mark. What do I do? ठीक है यार, छोड़ो, हमें क्या देखना है, accept करो, आगे बढ़ो. This is not like that. Okay, this is not like just ticking I agree to the terms and conditions and move ahead. ये उतना आसान नहीं है. When you are giving an explicit and look, I probably doubt that you have seen such strong words anywhere in financial reporting. We have never seen this. They always say that it is a matter of judgment, it is a matter of choice, it is a matter of option that the entity can choose which method has to be followed. It is judgmental. It is judgmental. And so far, whenever I have taught you, what I have told you, Ind AS financial reporting framework is a principle-based framework, not a rule-based framework. Go back to the very first class that I took for you. That is the financial reporting framework. Yes or no? In that class, what did I say? Is Ind AS a rule-based approach or is it a principle-based approach? तब बहुत बोल के मैंने कहा था कि ये रूल बेस्ड नहीं है, this is principle based. So even though you may not exactly have a rule prescribed for you, you need to ensure the principles at least are in line. So it becomes very difficult to, even for the auditor to question a lot of things. Yes, but these type of words, explicit and unreserved, ये first time है when you are seeing this. Yes, this is the first time that you are seeing this. And therefore, the explicit and unreserved statement of compliance that is there here is giving the onus on the management कि भैया don't move out of the compliance of Ind AS. They will not comply. They will comply with the provisions of Ind AS. करना ही पड़ेगा उनको. They have to do it because this is basically putting your head on that. This is there na. The noose is there. जहां पे फांसी लगता है. Yes, you are basically putting your head on that when you are making the statement. Because if you have not made, then that noose will start getting tightening. आपने ये statement कैसे दिया? That is the first thing that everybody will ask. हालांकि the expectations from the auditors are sky high. I don't deny that. Whenever anything comes out, they will ask what the auditor did, when in fact they should ask the management. Yes. So therefore, this becomes your understanding. Okay. So explicit and unreserved statement, nobody will make it without complying. तो ठीक है. और किया भी है and there is a non-compliance for the management and financial reporting purposes. These will become the Ind AS financial statements, first Ind AS financial statements, because one, they have adopted. Second, there is an explicit and unreserved statement. That's it. That's it. Are we okay with this? Yes. Dev, आपका मतलब क्या है? Means of scrap value. I did not understand this. Okay. I'm asking the second time. I'm not able to understand. Okay. All right. Fine. Okay, Shankar. Good to see you. Okay. All right. So let us proceed further. Let us proceed further. Coming to the next definition. Coming to the next definition. Okay. First, Ind AS financial statements. Second one is previous gap. Previous gap. What do you understand by the previous gap definition? The basis of accounting that a first-time adopter uses for its statutory reporting requirements in India immediately prior to adoption of Ind AS. Immediately prior to. See, you have to comply with all Ind AS. अभी हो सकता है कुछ Ind AS will not be applicable to you, तो नहीं है applicable. For example, you take a company like L&T, for example, or you take a company like TCS, for example. Ind AS 41 won't be applicable to them. उनके पास you don't have livestock, you don't have biological assets, you don't have any of that sort. So therefore, Ind AS 41 will not be applicable to them. Biological asset वाला standard, agriculture का standard will not be applicable. So obviously, they'll say, boss, I have not complied with Ind AS 41 because वो है ही नहीं मेरे लिए. My business does not have Ind AS 41. So when you give the explicit unreserved statement, it is obviously for all the Ind AS And when the auditor asks, how have you complied with Ind AS 41? TCS management, why should I comply? You are the auditor, check whether I have any of these assets in my books. I don't have them. And therefore, Ind AS 41 is not applicable. Auditor ko har jagah ghumao. Take him to all your office places. Is he able to check even one biological asset anywhere in your premises? Answer is no. And if you cannot find that, if he cannot find that, how can he say that Ind AS 41 is applicable? So you give an application, a statement for all the Ind AS. जो applicable नहीं है वो नहीं है, बस that's it. Okay? Yeah. All right. So previous gap, the basis of accounting that a first-time adopter uses for its statutory reporting requirements in India immediately prior to adoption. Immediately prior to adoption. Are we okay with this? Yes. Immediately prior to adoption of Ind AS. Okay. Now, let us understand with an example. Okay. A Limited is also listed in UK, is also listed in the UK, London Stock Exchange. Okay. So because it is listed in the UK, this is an Indian company which is listed in foreign entity also. So therefore, if you have this A Limited entity which is there in the UK, it will be preparing Indian financial reporting के लिए it would have followed accounting standards. This is prior to Ind AS applicability. It would have followed accounting standards. Coming to UK reporting, because it is getting listed on their stock exchange, obviously I will have to comply. Obviously, I will have to comply with their requirements, and therefore I will follow IFRS. Therefore, I will be following IFRS, IAS. Okay. I will be following IFRS or Indian accounting standards. So my question to you is, yeah, what will be the previous gap? Will it be accounting standards or will it be IFRS that is being followed for the purposes of reporting in the United Kingdom? Yes? What do you think? Exactly. It will be the accounting standards in India. ये तो you are doing it for meeting their requirements. Okay, but for the purpose of Ind AS convergence or Ind AS adoption, sorry, this will not be my previous gap. Look at the definition of previous gap. Statutory reporting requirements in India. So in India का बात कर रहा है. It's not talking about what you follow anywhere else. And therefore, your previous gap will be the accounting standards. Your previous gap will be the accounting standards that are currently present in India. Are we okay with this? Yes, sure. So we covered two things. One is first Ind AS financial statements. Second is previous gap. And now we move on to the most important definition, that is, ये हो गया पहला, ये हो गया दूसरा, and now we come to the third one, that is transition date. That is transition date. Okay, transition date. ठीक है. there is an entity that has crossed the 250 crore turnover, I mean the 250 crore net worth threshold in 2022-23. Okay, 2022-23. So therefore, when I talk about 2022-23, I have crossed 250 crores. So therefore, Ind AS will be applicable from 23-24. Okay. So I'll write the facts down. Crossed threshold in 22-23. Therefore, Ind AS applies for financial statements of 23-24. You tell me, you tell me what will be the transition date. अभी तक हमने definition नहीं पढ़ा है. I will not tell the definition because the definition is too uh, confusing if you read it the first time. आप मेरे को बताओ, you tell me what will be the transition date. What will be the transition date? What will be the transition date? I'll give you options. First one, A. Will it be 31st March 24? Will it be 1st April 23? What do you think? Will it be 31st March 24 or will it be 1st April 23? Namrata gave the answer before I asked the question also. Okay, what about others? Deepak, Mancha, Devraj, Satish Kumar, Manoj Pandey, Shankar. What do you guys think? What will be the transition date? Option B. Okay. All right. All right. Everybody has given one answer. I'm very happy about it. Okay. Because I have to explain only once. Everybody says 1st April 23 is the date of transition. If it was a normal world, I would agree with you and say that yes, 1st April 23, ideally, this is the date of transition. But let me then move ahead. आप बनाओगे financial statements. You will prepare the financial statements for 23-24. This will be your Ind AS financial statements. Okay, sir. Agreed. आगे बताओ. You have to prepare the comparison. You don't have any option. So therefore, the comparatives are prepared for 22-23. But these are under the accounting standard regime. अभी आप मेरे को बताओ, are you comparing apples to apples or are you basically just presenting financial statements for the heck of presenting the comparative column without any modification? So my question is, are these two comparable? Are these two comparable or not comparable? Are these two comparable or not comparable? आपके पास current year figures Ind AS, previous year figures only accounting standards, and then you present it to the investor. Investor क्या ही देखेगा उसमें? What will the investor look at in that? Yes. मिसाल के लिए, for an example, investment in equity shares of X Limited. In accounting standard, it was at cost 100 rupees. In Ind AS, it is at 120 rupees fair value. Now the question is, investor will ask is, when did you invest? तो बोलेगा मैंने इन्वेस्ट कहां किया, तो फिर 100 has become 120. हाँ, that is because of Ind AS. Sir, comparison किधर है? Where is the comparison? So they are not at all comparable. Good. So I cannot present this. तो सर एक ही साल का बनेगा? नहीं, बनेगा दोनों साल का. But 22-23 also will have to be prepared on the basis of Ind AS. So now I will add more options. Will it be 1st April 22 or will it be 31st March 23? Will it be 1st April 22 or will it be 31st March 23? That's right. That's right. देव, मुझे आपके क्वेश्चंस नहीं समझ रहे हैं. नॉर्मल गेन का मतलब कहाँ है? आई डिडंट अंडरस्टैंड. कौन सा नॉर्मल गेन, विच स्टैंडर्ड? प्लीज आप पूरा क्वेश्चन लिख के बता दो. ओके, because today I have neither discussed about scrap nor about normal gain. I'm not able to understand. Okay, yes, all right, excellent. So now your transition date will be 1st April 2022. 1st April 2022. So basically, when I'm preparing my financial statements, I will be preparing 23-24 Ind AS. I will be preparing 22-23 Ind AS. And I will prepare a third balance sheet. And I will be preparing a third balance sheet 1st April 2022 Ind AS. And 1st April 2022 is your transition date. 1st April 2022 is your transition date. All your Ind AS adjustments on transition will happen here. All the Ind AS adjustments on account of transition will happen here. उसके बाद you will just follow the Ind AS flow. After that, you will just follow the Ind AS flow. Don't confuse the reader by giving Ind AS adjustments also in 22-23 and don't also give the impacts in 23-24 all of a sudden. You do all the adjustments on 1st April 22. You have transitioned to Ind AS. And then all you need to do is continue the Ind AS reporting. So therefore, the first time you will prepare or the first time you are adopting to Ind AS, you will have 3-columnar balance sheet. First one, current reporting period. Third one, comparative reporting period. And second one is comparative reporting period. And third one is transition date Ind AS financial statements. Transition date. Okay. Now my next question to you is, are you okay with this? Yes, everybody has understood this transition date. Sabko samjha hai, right? Now the question is, have you seen this somewhere else? Have you seen this kind of presentation somewhere else? Yes. Have you seen this? तीन बैलेंस शीट बनाना पड़ेगा. Have you heard this somewhere else? Come on. Yes, 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 yes. Prashant Kumar Shukla is right. Have you heard this? 3 balance sheets? Have you heard this? Sir, सुना तो है but याद नहीं है. Yes, come on girls. Namrata, have you heard this? Yes. Tanisha is not there today. That's right. That's right. Ind AS 8. When we used to have prior period errors. Okay, or not the prior period. Yeah, basically prior period items. Okay, or second one, change in accounting policy. Change in accounting policy. Yes, we used to restate it on a retrospective basis. What do you think? Adoption of Ind AS. Is it a change in accounting policy? Is it a change in accounting policy? Yes. A first time adoption of Ind AS. Is it a change in accounting policy? It is. You are not doing it voluntarily. It is being imposed upon you. So इसके लिए from AS to Ind AS you are changing your accounting policy. It is a change in accounting policy. But yes, sir, हम तो Ind AS में थे ही नहीं. We were in AS. AS to Ind AS, my basis of preparation itself has changed. So why am my basis is changing? Because it is now become a different policy that I'm following. It is now a different policy. It is a different framework that is being followed. Though I'm not doing it voluntarily, I'm doing it out of a statutory requirement. I'm doing it out of compulsion. So therefore, yes, it is not a management driven change in accounting policy. Rather, it is something that is a management, that is a statutory imposition that is there on the entity to follow. But nonetheless, wo hai na, you have that with you. And therefore, you are going to take it as a, a change in accounting policy, kind of that. And therefore, three balance sheets. But normally we don't give this as the basis for explaining this because when I do the transition, I don't really have Ind AS in force. So I cannot say this is pursuant to Ind AS 8. Nah, this is not pursuant to Ind AS 8 because at the time of moving, Ind AS 8 was not applicable in the first place. पहले आप Ind AS में आ जाओ उसके बाद Ind AS 8 will become applicable. So first beta you come into the framework, then we'll give you. So ठीक है, I just drew parallels to Ind AS 8 because I wanted you to understand that this is not the first time you are seeing it. This has happened earlier also. This has happened earlier also. Are we okay with this? Yes. So my transition date is 1st April 2022. My transition date is 1st April 2020. All right. Are we clear? So now if I look at the definition of transition date, if I now look at the definition of transition date, the beginning of the earliest period, the beginning of the earliest period for which an entity presents full comparative information. Full comparative information under Ind AS in its first Ind AS financial statements. In its first Ind AS financial statements. I didn't get your question, Mansha. There are two balance sheets for year 22-23. Where do you see two balance sheets? I can see only one balance sheet for 22-23. Please tell me. Okay. The beginning of the earliest period for which an entity presents full comparative information under Ind AS in its first Ind AS financial statements. I did not use this definition because first time padte you would get confused, but now there is no chance of confusion. Beginning of the earliest period, okay, for which an entity presents full comparative information. So 23-24 is the year when you are actually being required to comply with Ind AS, number one. The second thing is 22-23 is the period where you are presenting full comparative information in respect of the first Ind AS financial statements. And therefore, the transition date is the beginning of that year 22-23, that is 1st April 22. It is the beginning of the earliest period for which an entity presents full comparative information. So that will become 1st April 2022. Obviously, this is a change in policy, but I will not use that to explain this because Ind AS right now is not applicable in the financial statements as yet. वो काम अभी होगा, and after that job happens, then you can say Ind AS 8 applies and this is my change in accounting policy. I just gave you that parallel so that you are aware that team balance sheet, this is not the first time. This is the second time that we are presenting. This is the second time that you are seeing this. Okay? Yeah. Mansha, there are two balance sheets for year 22-23. मुझे दिख नहीं रहे हैं ना, दो ही तो है. Yes, why not one only? Aligned with Ind AS. Everything is aligned with Ind AS. 23-24 तो है ही है. 22-23 also is as per Ind AS and 1st April 22 also is as per Ind AS. Yes, so please clarify your query. Yes. All right. So the beginning. Acha. Now let us suppose that you are an entity whose securities are in the process of getting listed in the capital markets. Okay, you are in the process of getting your securities listed. Now, since you are the first time, since you are under AS and now you want to get listed, what do you mean get listed? Basically it means that Ind AS will now apply to you. Ind AS will now apply. So it is in the process of uh, transition. So 23-24 is the year when you are starting your Ind AS. Now, when I come out with a public offer, yes, when I come out with a public offer, I have to present 5 years comparative. I have to present 5 years comparatives and the current period. I have to present 5 year comparatives and the current period. ठीक है, तो हम 5 साल का बनाते हैं 22-23, 21-22, 20-21, 19-20, 18-19, 18-19. Are we okay with this? Yes, 5 साल हो गया ना, 1 2 3 4 5. Yes. Now I want you to tell me. What will be your transition date? what will be your transition date? Please remember, this is the year when you are getting listed. So Ind AS will apply here. So what, but because they are in the process of getting listed, you will have to present 5 years financial information. So that also will happen under Ind AS. So now this will get converged to Ind AS, Ind AS, Ind AS, Ind AS, Ind AS, and 1st April 18. 1st April 18. This will be now your transition date. This will be your transition date. Yes. Are we okay with this? Basically, we are trying to say that every time you do the, every time you are preparing, you are transitioning to Ind AS, look at the earliest comparative period, and beginning of that earliest comparative period is what will be your transition date, is what will be your transition date or date of transition. Are we okay with this? Yes. पहले 3 definition अपने को clear हो गए क्या? Yes. Anybody has any doubts? Yeah. Just give me a minute. No, Deepak, financial statements will not be presented for 1 year comparison in case you are transitioning to, in case you are in the process of getting listed. You are issuing the document, you come out with the prospectus, right? The prospectus will have 5 years comparison. And since you are transitioning, since you are in the process of getting listed, Ind AS will apply to you. And because Ind AS applies to you, you are preparing a prospectus because you are getting listed. Because you are getting listed, Ind AS applies to you. So therefore, the financial information which you present should be as per Ind AS because you are getting listed. And therefore, all the 5 year comparisons that you are going to give should be as per the Ind AS reporting requirements. You are not presenting 1 year comparison in financial state. You are not presenting 5 years in the financial statements. In the financial statements, you are presenting only 1 year, but you are issuing a prospectus to the public which contains the previous 5 years, and therefore, you are required to transition right from the beginning of the earliest transition period. So in this case, I'm not referring to financial statements at all. I am referring to the prospectus which you are issuing. That becomes the basis for your financial reporting, and therefore there you will have to follow Ind AS. There you will have to follow Ind AS for all the 5 years. तो आपका जो भी client है who is wanting to list, please पहले ही ट्रांजिशन कर दो, 1 साल में सब खत्म हो जाएगा. This is a nightmare if you have to do it for 5 years. Okay. So if you have any client who wants to get listed, you should advise him, sir, we will first change your financial statements to Ind AS. Uske baad, because you always have a voluntary option, of restatement, so of adoption. तो आप पहले कन्वर्ट कर लो टू इंड एस एंड देन यू गो फॉर लिस्टिंग आपका काम आसान हो जाएगा. यस, योर जॉब विल बिकम इजियर. ओके, आर वी क्लियर? यस, एनीबडी हैज एनी डाउट्स? बोलो. ओह, ओके. All right. Now this you can forget. We come back to our main example. Okay. Now let us proceed further. Let us now proceed further. Ind AS, Ind AS, Ind AS. ब्रेक दे देंगे यार थोड़ा सा, another maybe 20-25 minutes. उसके बाद I'll give you a break. Okay. All right. Now let us start. Understand this. When are you transitioning to Ind AS? All of us agree 1st April 22. All of us agree 1st April 2022 is the date we are transitioning to Ind AS. That means इसके पहले the date was 31st March 22. Yes. इसके पहले it is 31st March 2022 and on 31st March 22 I was following accounting standards. Okay. And 1st April 22 say I will be following Ind AS. 1st April 2022 onwards I will be following Ind AS. That means now listen carefully. A, there will be some items which are recognized, or there will be some items which are recognized in accounting standards but should be de-recognized in Ind AS. There are some items which are recognized in AS but de-recognized in Ind AS. Are we clear? Yes, there are some items which are recognized in AS but de-recognized in Ind AS. So let me write down because दोनों साइड से हम applicable है ये. Okay, so recognized in AS but de-recognized in Ind AS. Okay, now see, there was a standard AS4. Okay, there was an amendment to that also. Okay, forget the amendment. Yes, forget the amendment to that. So under accounting standard, you had a proposed dividend. Acha. Right now it is amended. Right now AS is amended. I am going before the amendment. Proposed dividend. Normally, when is the liability for proposed dividend arising? When the shareholders approve the proposed dividend. Okay. But what accounting standards used to do was, they would tell, declare ho gaya hai, you have the intention to declare, then make a provision for proposed dividend. So you would pass P&L appropriation account debit to proposed dividend, and proposed dividend would go and sit in your balance sheet. Okay, it would go and sit as one of the current liability items. So therefore, proposed dividend was recognized. I once again repeat, Now it is not there. Now it's removed, but ये कुछ जमाने की बात है. Now under Ind AS, proposed dividend, derecognized, means you are not permitted to record proposed dividend. So therefore, the proposed dividend which is appearing on 31st March 22, it should be derecognized when I move to 1st April 22. When I move to 1st April 22. And it will be recognized in the financial statements only on the date the liability has crystallized, which is when the shareholders grant their approval. Which is when the shareholders grant their approval. Are we clear with this? So the first thing what we are going to do is, items which are recognized in Ind AS, items which are recognized in the AS regime, but not permitted under Ind AS, derecognize. Not permitted under Ind AS, derecognize. Okay, तो ये हो गया पहला. Second, B part. When I talk about B part, now, derecognized in AS, but to be recognized in Ind AS. To be recognized in Ind AS. Okay. I'll give you an example. You have just now studied financial instruments. So I hope that this is fresh in your memory. Yes. Accounting standards. Bills receivable. Yes. I got a bills receivable from my customer. So bills receivable account debit to customer. I needed the money, so I go to the bank and discount the bill. Bank account debit, discount debit to bills receivable. Okay. So this is the entry that will be done. This is the entry that will be done. So basically what you are doing is, you had recognized the bill earlier and now you are derecognizing it. Now you are derecognizing. Yes. Acha, on the due date, if customer does not honor the bill, bank किसके पास जाएगा? Who will the bank go to? Will the bank go behind your customer and say, पैसे दे दो? Or will the bank say, why should I go and find that person? ये तुमने पैसे लिए थे ना, तो तुम ही अभी हमको वापस करो. You only come and give it back to me. Are we okay? Yes. So now tell me, what will the bank do in case there is a default by the customer? What will the bank do? Will the bank go behind the person who accepted the bill, or will it come behind the person who has discounted the bill? यार मुझे आपके क्वेश्चन समझ नहीं आ रहे हैं देवराज. यू आर आस्किंग सम थिंग्स. कैलकुलेशन स्टेप आएगा अभी. कैलकुलेशन स्टेप इज नॉट सो सिंपल कि मैं सडनली उठ के आई एक्सप्लेन कैलकुलेशंस टू यू. ओके. Calculations will come. Okay, tell me, what will the bank do in this case? I gave a bill to you. You wanted the money. You went and discounted the bill. On the due date, I did not fulfill the commitment. बैंक किसके पास जाएगा? Will the bank come to me to demand the money, or will the bank demand the money from you only? Will the bank demand the money from you only? What do you guys think? The one who discounted the bill, the bank will go to them only. So in this case, you discounted the bill, bank will go to you. Bank does not even know where I stay. Okay, so bank will not come behind me. Bank knows you, bank will collect the money for me. Now, okay, what did you do? You discounted, you de-recognized the bill receivable. You de-recognize the customer also, because customer gave you the bill. Because customer gave you the bill. So as on this date, in your books, when you discount the bill, do you have a corresponding financial liability with you standing next to you in your financial statements? See, ideally होना चाहिए ना. Have you studied this under Ind AS 109 or not? Yes, bills discounting. Yes, have you studied this? Bolo, have you studied this? Yes or no? When I pass this entry on discounting, what am I doing? I am de-recognizing the customer. देखो यहां से customer चला गया. Yes, यहां से customer चला गया. And here bill भी चला गया. So neither am I showing a financial asset, nor am I showing a financial liability. Everything is gone from my books. Suppose you discounted the bill on 25th of March. The bill's due date is 30th of April. So as on 31st March, your balance sheet neither has a bill receivable, nor does it have a customer. All that you have is money, whereas in fact it is a money that you owe to the bank. It is a money that you owe to the bank in case your customer defaults. And therefore, you are having a financial liability sitting on your head. You are having a financial liability sitting on your head, but at the same time, you're also having the customer collections that is there for you. At the same time, you are also having the customer's collection which is there for you. And therefore, what I create is a financial liability. What I create is a financial liability for bill discounted. I cannot de-recognize bills receivable. I cannot de-recognize bills receivable. Are we able to comprehend this? Yes. Are we able to comprehend this? So under accounting standard regime, we de-recognized the bills. But यहाँ पे वो नहीं चले. You went to the bank and got the money. That will become my. That is going to become my. What to say? You went to the bank and got the money, so it is going to become like an obligation for you, a temporary loan that you have to repay to the bank. A temporary loan that you have to repay to the bank. Are we okay with this? Yes. Are we okay? So therefore, I cannot de-recognize the bills receivable. I cannot de-recognize the bills receivable. In days, de-recognition of bills receivable not permitted. De-recognition not permitted. Okay, that's right. So everybody remembers, very good. So हम de-recognize नहीं करेंगे. We are not going to de-recognize it. Are we okay? So this is the second. First one was recognized in AS but not permitted under Ind AS, so de-recognize. B was de-recognized in AS but it should continue to be recognized in Ind AS. Okay, so ये हो गया second adjustment. Third adjustment. Reclassify. Reclassify. Okay. So when I talk about reclassification, what does it mean? When I talk about reclassification, it could mean, for example, moving items from one head to the other, moving items from one head to the other. Like, for example, investment property, we have a separate accounting standard and a separate requirement for that, even in the schedule that is there. So, for example, investment property. Okay. This was there earlier also. This is there now also. But only thing is different category में. So what I'm doing is I'm just shifting it from one category to another. तो इसको हम लोग बोलते हैं reclassify. We call this as a reclassification. Yes, preference capital. It was shown under shareholders funds under accounting standards. But right now हम लोग कहाँ दिखाते हैं? It's a normal preference share capital. So it has to go under financial liabilities. It has to go under financial liabilities. Are we okay with this? Yes, are we okay? Any doubts? Any doubts so far? No doubts. And last one is remeasurement. Last one is remeasurement. Okay. Now see, ideally, you could be doing number one, recognized in AS, de-recognized in Ind AS easily. De-recognized in AS to be recognized in Ind AS, that is also not very difficult. Reclassification to very simple. It is the main problem of the transition is the remeasurement. The main problem is transition is on account of remeasurement. And this is where Ind AS 101 comes to help you because it is extremely challenging to remeasure everything. It is extremely challenging to remeasure, and therefore Ind AS 101 gives you certain proxy, gives you certain surrogate items, gives you certain options to follow. Follow that option and transit to Ind AS, and you are done with the adoption, first time adoption. Okay. So at this stage, we take a 10-minute break. We will resume at 8:45. We will resume at 8:45. Okay. Take a quick break and come back, then we shall continue. Okay. Break, please. Okay. So basically, what we are trying to say is the four activities will happen under Ind AS. Okay, four activities will happen. First one is I will de-recognize those items in Ind AS which are recognized in AS. Like for example, we are having a proposed dividend prior to amendment. I will recognize certain items which are otherwise de-recognized. I will reclassify and finally I will remeasure. Just give me a minute, please. Just give me a minute. Yeah, sorry for that unexpected interruption. Yeah, okay. You got two breaks from me. All right, fine. So these are the four things which we'll basically be doing all throughout the entire Ind AS 101. So that is what we will be following. Okay. So now let us look at a couple of questions before we proceed further. Okay. We'll look at some small questions, and after that we will then move into the actual transitions. Okay. So coming to your study material. Okay. Okay. Now, you don't have to look at the solution. X Limited is required to adopt Ind AS from 1st April 20X1 with comparatives for 1 year, that is for X0, X1. What will be the date of transition? So, when is the requirement to adopt? From 1st April X1. Comparatives for the previous year, that is X0, X1. So you only tell me what will be the date of transition. Yeah. What will be the date of transition? Quick. What will be the date of transition? 14X0. That's right. 1420X0. Okay. So that completes illustration. You will not get these questions, obviously. Okay. So that is your illustration one. Coming to the next one, that is illustration two. This also is something which we have already done. Company B is a foreign subsidiary of Company A and has adopted IFRS as issued by IASB as its primary gap for its local financial reporting purposes. So I have Company A, I have B. B is the foreign subsidiary and B follows IFRS. Okay. Company B prepares its financial statements as per accounting standards specified under section 133. Read with rule 7 of the company's accounts for the purpose of consolidation with company A. So it follows IFRS and it follows accounting standards also. On transition of company A to Ind AS. Okay. So what is transitioning to Ind AS is company A. What would be the previous gap of the foreign subsidiary B for its financial statements prepared for consolidation with company A? Okay. First things first. Is B transitioning to Ind AS or not? Will B, company B, transit to Ind AS or not? Is B transitioning to Ind AS? Simple question, yeah. They have told A is transitioning to Ind AS. They have not said anything about B. So is B going to transit to Ind AS? Obviously, because its parent is transitioning, therefore the subsidiary also has to transit. There is no option there. So B also will transit. And because B is transitioning, therefore its previous gap is going to be accounting standard, not the local IFRS that is being followed in that foreign country. Okay, the previous gap will be the accounting standards. Okay, so that takes care of illustration two. Coming to the next one. Coming to the next one. Okay. Illustration 3. See, we have done all these questions. Okay. So, E Limited is required to first time adopt Indian accounting standards from 1st April X1. Management has prepared its financial statements and an explicit and unreserved statement of compliance with Ind AS has been given by the management. However, there is a disagreement on application of one Ind AS between, there is a disagreement on application of one Ind AS between the management and the auditor. Can such financial statements of E Limited be treated as first Ind AS financial statements? Okay. So this is what is the question. So you tell me, बहुत discuss कर लिया. You have discussed a lot about this. Can it be treated as first Ind AS financial statements? Very simple. Yes or no. मैं answer दो. Yes. Yes, it will be treated. Absolutely. Auditor क्या बोले इससे हमें कुछ फर्क नहीं पड़ता है. At least for financial reporting purposes. Okay. So your job in financial reporting paper is that you are the management. That's it. You are not the auditor. So don't think like an auditor. Okay. You are the preparer of financial statements. You have to prepare it correctly as per Ind AS. That is what your thought process should be. In accounting standards, I will tell you to think from the perspective of an auditor. Okay, so illustration 3 is done. Coming to the next one, illustration. All right. There is one question that we should be doing. Okay. This is page number 14.49. Test your knowledge. Okay. So coming back, I'll just quickly take you through one more thing and then I will come to solve this particular question. Okay. See, I told you we are going to do 4 things. One is de-recognize items in Ind AS. Second is recognize items in Ind AS. Third is reclassify. Fourth is remeasure. Okay. All these things once you do, there could be a remeasurement impact. There could be a remeasurement impact. Remeasurement impact matlab kya? Under accounting standard, it is X value. Under Ind AS, it is Y. So X should become Y. So there is a remeasurement impact. Now this remeasurement impact this remeasurement impact will never go to your profit and loss account because you make money out of operations. You don't make profit out of transition to Ind AS. Otherwise, all people will leave their business and everybody will go on transition. Okay. So therefore, the gain or loss on the transition will never be routed through the statement of profit and loss or even other comprehensive income. It will typically go and sit in your reserves. It will typically go and be adjusted against your retained earnings or any other specific reserve as the case may be, but never will it go through the P&L. So what will happen is I have equity under accounting standard. Equity means the entire equity. Okay. That is shareholders funds and reserves and surplus. Okay. Shareholders, capital and reserves. So these are the 2 things which are there under AS and Ind AS. So capital to chalo fir bhi it will be the same because assuming there is no fresh issue, etc. But reserves, will it be same? Will it be same? Answer is not necessarily. Not necessarily. It will not be the same. It could possibly be different. Why? Because remeasurement impacts go to reserves. Recognition, derecognition impacts are routed through reserves. Nothing hits the P&L, everything hits the reserves. So in our example that we saw, The transition date was 31st March, 1st April 22. The transition date was 1st April 22. So accounting standards had a particular equity balance of whatever amount, and on 1st April 22, Ind AS regime will have a different amount. The only change would be either of these four: recognition, derecognition, reclassification. Obviously, there won't be any impact. And last one is remeasurement. So all these impacts will be routed through retained earnings. So therefore, what are you going to do? What are you going to do? You are going to recognize it and present a separate reconciliation of equity. You are going to recognize and present a separate reconciliation of equity. Okay. Reconciliation of equity. Profits also could have changed. Yes. So therefore, you will present a complete reconciliation of equity. And once you present that reconciliation of equity, that is the document or the statement which tells your reader of financial statements, हमने adoption कैसे किया? How did I actually achieve this job of adoption? That is explained by the reconciliation of equity. That is explained by the reconciliation of equity. So four things plus one statement, reconciliation of equity, is what will be done under Ind AS 101. Okay. All right. Fair enough. So shall we proceed further? Any doubts so far? Anybody? No doubts? Yes. No doubts? Good morning, Miraj. Good morning. Okay. Any doubts? Anybody? No doubts. So let us proceed to question number 6. Let us proceed to question number 6. Mathur India Private Limited has to present its first financial statements under Ind AS for the year 31st March 20x3. The transition date is 1st April x1. You want to cross confirm? X2, x3 is the current year. X1, X2 is the comparative. So 1st April X1. The beginning of the earliest reporting period is going to be your transition date. So transition date is 1st April 20x1. The following adjustments were made upon its transition to Ind AS. Company opted to fair value its land as on the date on transition. The fair value of the land on 1st April, that is on the date of transition, was 10 crores. Carrying amount as on the same date under existing gap was 4.5 crores. So I am having an upward valuation of land. So that is 5.5 crores. So we will be having land account debit to, if revaluation surplus is there, you can put it there. Otherwise, opening retained earnings. Opening retained earnings. So this will come as 5.5. We increase, and all these entries, mark my words, these are all passed on 1st April 20x1. 1st April 20x1. Land account debit to opening retained earnings 5.5. First entry. I hope you are able to understand. Okay. Anybody has any doubts in the first adjustment? Anybody has any doubts in the first adjustment? Yes. Come on, guys. Any doubts so far? Clear. Okay. Fine. Good. So let us then proceed further. Let us proceed further. The company has recognized a provision for proposed dividend of 60 lakhs and related dividend distribution tax of 18 lakhs for the year ended 31st March 20X1. It has written back, it was written back as on opening balance sheet date. So proposed dividend was recognized in the financials, whereas I cannot recognize until I get the approval of shareholders. So I will have to de-recognize that. I will have to write it back. So मैं write back कैसे करूँगा? Proposed dividend is a credit. So I will debit proposed dividend. Proposed dividend account debit to opening retained earnings. Opening retained earnings. So that comes to how much? 0.6 crores plus 0.18 lakhs. So that together comes to 0.78. 0.78. Because of this, my retained earnings gone up. Okay. And proposed dividend, what was appearing in the balance sheet, will no longer appear. Will no longer appear. Are we okay with this? Yes. Are we okay? So an item which was recognized in AS is now de-recognized under Ind AS. Any doubt so far? We add the dividend distribution tax because that is on distribution to shareholders. It won't hit the profit and loss account. Yes, no doubts, all clear. Okay, so let's proceed. The company values its investment in equity shares on the date of transition. The increase on account of fair valuation is 75 lakhs. So very simple. Investment in equity debit to opening retained earnings, 75 lakhs. 0.75. 0.75. Are we okay with this? Yes. Anybody has any doubts? Yes. Anybody has any doubts in this adjustment? All fine? Yes. All clear. So let us proceed. The company has an equity share capital of 80 crores and redeemable preference share capital of 25 crores. So this becomes a reclassify item which is affecting my equity because redeemable preference shares were previously shown under share capital only, but now under Ind AS they have to be moved towards liabilities. So we are going to change the equity also on account of this. So the entry that will be passed is preference share capital equity debit to preference share capital liability. This is 25 crores. This is 25 crores. 25 crores, no? Yes. 20. Are we clear with this? Yes. Are we clear? Remeasure. This is de-recognize. Remeasure. Okay. Are we clear with this? Okay, are we clear with this? Yes. 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 Are Shall we proceed? The reserves and surplus as on 1st April X1 before transition to Ind AS was 95 crores, representing 40 crore general reserve, 5 crores of capital reserve acquired out of business combination, and balance is surplus in the retained earnings. Company identified that preference shares were in the nature of financial liabilities. What is the balance of total equity as on 1st April X1 after transition to Ind AS? After transition to Ind AS. Okay. Show the reconciliation between total equity as per AS and as per Ind AS to be presented in the opening balance sheet as on 1st April 20X1. Ignore deferred tax impact. ठीक है, कोई बात नहीं. तो adjustments, so we have done everything. We have done the entire adjustments. So now let us move on to the next one. This was asked in one of the RTPs actually, and then they have brought in into this, but I don't think you can expect these type of simple questions, but okay. For a start, we can expect, no problem. So we started off with equity share capital. We give the heading total equity and other equity as per Ind AS. On 1st April 20X1 is what I think is the date. Yes. 20X1. Okay. And now let us start it. Equity share capital. $80. Other equity. Obviously, preference won't come here. It has been reclassified. General reserve. 40 crores. Capital reserve. Capital reserve. 5 crores. And now we come to retained earnings. Now we come to retained earnings. As per GAAP, total reserves and surplus was 90. Total was 95, representing 40 crore of general reserve, 5 crores of capital reserve. So 90 minus 40 minus 95 minus 40 minus 5. Okay. 95 minus 40 minus 5. So that gives us 50. Next, transition adjustments. Transition adjustments. Okay. When I talk about transition adjustments, the first one is remeasurement of land. 5.5. Next, remeasurement of land is done. Coming to the next one, dividend. So derecognition of proposed dividend. Derecognition of proposed dividend and DDT. Proposed dividend and DDT 0.78. Fair valuation of investments 0.75. Anything else? Yes. All right. So coming next. 57.03. So add this to the above. It comes to 182.03. 182.03. Total equity as per Ind AS. As per Ind AS. Are we clear with this? Yes. Bolo yaar. Anybody, any doubts, questions, clarifications needed? Sir, after reclassification, redeemable preference shares come into financial liability. Is it needed to show at fair value, that is present value? Definitely. Definitely it is required because that is what is described under Ind AS. But how will we look at Ind AS 101 is what we will discuss in the coming sessions. Okay, so that we will have a look at it. Okay, all right. Sir, should we read the bare text of Ind AS? Okay. Have you gone through the bare text of an Ind AS? Yes. I'll just show you one or two bare texts. Okay. This is Ind AS 115 bare text. Okay. Now, there is no harm in reading it. But the problem is, इसमें कुछ अभी फिलहाल you won't be able to make out. Because what happens is, in this case, it's not even having a commentary. Okay. So, for your examination purposes, it is not required. Okay. Bare standard, nobody asks. Okay. So, therefore, you are not going to, you need not read it now. Later on, after you clear, when you have all the time in the world, it is what we all feel. यार एक बार बस पास हो जाए ना, फिर खत्म, फिर life set है अपनी. Those people who believe like this, you can read it after that. 5 साल बाद, after you clear, 10 years after you clear, 20 years after you clear, हम कभी settle होते ही नहीं है. Okay, so that time you can take a call whether you want to read. Okay. It is freely available on MCA portal. So please download and read it from there. Download from MCA portal only. That's the updated one. हमारा institute से भी ज्यादा अच्छा font है उसका. So institute's website also has this MCA, has the Ind AS bare text uploaded. But I will prefer that you read it from MCA. Okay. All right. Fine. Now, ये हो गया हमारा. Okay, this is what is the equity. I got a question, sir. Reclassification of preference shares will affect equity? Definitely. Equity उतने से कम हो रहा है. It is moving from out of equity and moving into liability. It is coming out of equity and moving into liability. See, this question again I won't say it is entirely correct because we have not, we have just moved the preference capital out of it. Okay. So therefore, from that perspective, we'll have to check how exactly we can do the in first time adoption in case of financial instruments. Okay. As of now, module is sufficient. Yes, module, your RTPs, your MTPs, your past papers. Please do all this. You'll be more than placed to score at least 90, 95. Okay, all right. Coming next, they have asked for a reconciliation. They have asked for a reconciliation. So basically, my equity as on the original equity. Okay, AS. Equity under accounting standards. How much does that come to? 80 crores share capital, 25 crore preference share capital, 40 crores general reserve, 5 crores capital reserve. Remaining entirely is our retained earnings. So that is basically 95. So 80 plus 25 plus 95. 80, 25, 95. So this is 200. 200 has now fallen to 182.03. So yeah, reduction Q, why 200 has become 182.03? Well, 200 has become 182.03 because of first one, 25 preference capital you removed. Okay. You remove 25 from there. Okay. Next. I'm having remeasurement 5.5, proposed dividend derecognition 0.78 and 0.75. That is your investments revaluation. So this breakup is what is sufficient for 200 to 182.03. Are we okay with this? Yes, इसको statement form में बनाओगे, you will get your uh, yes. Any doubt so far, guys, girls? Yes. जल्दी से बना दो reconciliation. Let us see. Yes. Quickly do the reco. Okay. So I hope it is clear. 200 minus 25 is 175. And then to that 175, you add 5.5 plus 0.78 plus 0.75. You should get 182.03. That closes this. Okay. So that takes care of question number 6. That takes care of question number 6. Any doubts so far? Anybody? No doubts? Okay, so then let us move on to the next. We now come to specific transitory items. This is what is extremely important. Okay, we now come to specific transitory items. Abhi overall view you are having. So now we come to specific transitory items. Shruti, no sir means not clear or no doubter. Okay, so let us proceed. Specific transitory items. So there are multiple items. So आज we'll try to do one thing, okay, and then we'll take a call. Okay, so first one is ESOPs, or rather, ठीक है ESOPs. Okay, fine. So now let us understand the concept. देखो rule is there, but if I just give the rule to you, आप आज याद करोगे, कल भी याद करोगे, परसों भूल जाओगे, एग्जाम के दिन तो कतई भूल जाओगे, और उसके बाद बैठोगे कि सर ने कुछ पढ़ाया नहीं. ओके, so therefore we will understand with the help of an example. We will understand the treatment, and you will only tell me what should be the transitory provision. Okay, and I'll follow this approach for all the transition adjustments, because उससे क्या होगा, you are brushing up your knowledge on the other Ind AS also. So that is how we are going to do it. Okay, तो शुरू करते हैं. Grant date. Okay. I'll do it on a separate page. ESOPs. Okay. I'm dividing it into three categories. Date of transition. Date of transition, 1st April 2022. 2022. Next, grant date, 1/4/15. 1/4/15. Vesting period, 3 years, 5 years. Okay. Exercise period. Exercise period, 1 year, 5 years, 4 years. Okay. Achha. You guys have studied share-based payments. Yes or no? You guys have studied share-based payments. Yes or no? Yes. So now, when we have studied share-based payments, you will now be able to answer my questions. Okay. Exercise period. I'm not asking calculation. Not exercise, sorry. Vesting period. What is the journal entry that we pass in the vesting period? For options that are getting vested, what is the journal entry that you pass? Yeah. What is the journal entry that you pass? You remember this entry? Employee benefit expense account debit. Employee benefit expense account debit to SBP reserve. To SBP reserve. Okay. All right. Now, employee benefit expense account debit to SBP reserve is what you pass. Yes or no? And when the options get exercised, what entry do you pass? When the options get exercised, you pass the entry SPP reserve. If you are to get some money, you will get some money. Okay. If you don't get some money, fine. Okay. So I'm not interested in all those things right now. To share cap. Yes. I'm not talking about securities premium, collecting so much, this, that, nothing. Okay, plain simple accounting. Okay, EB expense account debit to SBP reserve, SBP reserve account debit to share capital. So this is in the vesting period. Exercise period. Are we clear with this? Yes. So this is the set of entries that will be passed every time. Okay. So now let us proceed. And now you will tell me what we should do. Okay. What is pending is what you will tell me. Case 1. Is vesting pending? Yeah. First case. When does my vesting period end? When does my vesting period end? Come on, quick. Yes. Case 1. When does the vesting period end? Yes. So vesting ends on 3 years. 31/3/2018. Yes. Are we clear with this? Any doubts so far? No doubts. Exercise period ends 1 year after that. Ends on 31/3/2018. 31/3/2018. 2019, sorry. Vesting ends on 31st March 2018. Exercise ends on 31st March 2019. Are we okay with this? Yes. Now, that means as on 31st March 18, there will be a balance As on 31st March 18, there will be a balance in SBP reserve, and as on there will be SBP reserve, and on 31st March 19, SBP reserve equal to 0. Are we able to understand this? On 31st March 18, I have booked all the options, yes, based on the estimates that are shared with us. So therefore, that becomes a balance in SBP reserve. By 31st March 2019, by 31st March 2019, yes, are we clear with this conclusion? Come on, guys, where are you? Are we clear with this conclusion? Okay. So now you tell me there is no balance in SBP reserve. All the shares are vested and exercised. Everything is done. So therefore, SBP reserve balance is 0. SBP reserve balance is 0. Are we able to understand this? Yes? Okay. See, the options were granted on 1st April 2015. The vesting period is 3 years. That means for 3 years, you will only get entitled to the option. So in those 3 years, you will pass the entry SBP, EBE account debit to SBP reserve. EBE account debit to SBP reserve. That means as on 31st March 18, I am having balance in SBP reserve. I am having balance in SBP reserve. And as on 31st March 19, when the options get exercised, when the options get exercised by the employees, that exercise tenure is 1 year. End of 1 year, if it is not exercised, it will definitely be lapsed, and it has happened. And it has happened. So therefore, on 31st March 2019, SBP reserve will go and close against your share capital. SBP reserve will close against your share capital. Are we okay with this? Yes, SBP reserve, sorry. SBP reserve will close against your exercise, and if anything is left over, it will go against retained earnings. But my point of thing is, by 31st March 2019, will I have SBP reserve? What you say? Will I have SBP reserve by 31st March 19, or would it have become 0? Would it have become 0? Prashant, let me know. Yeah. Prashant, did you follow? Yes. Tell me, as on March 19, will I have SBP reserve or will it be 0? Others, please answer. Since vesting period also is done, exercise period also is done. It will be 0. It will become 0. Excellent. Mohammed, Prashant, Namrata, everybody said that as on 31st March 19, it will become 0. 0 म्हणजे what do you mean by 0? 0 का मतलब अभी ये अकाउंट में कुछ भी बैलेंस नहीं है. As on this date, there is no balance. SBP reserve जो था, everything has been what you can say, everything has been knocked off by 31st March 2019. By 31st March 2019. What is the date of transition, sir? The date of transition is 1st April 2022. Okay, 1st April 2022. Yes. No SBP reserve as on. No SBP reserve. And because there is no SBP reserve, will it affect my transition? That is the last question. That is the last question. Because there is no SBP reserve, is it affecting my transition? Is it affecting my transition? Transition date क्या है? 1st April 2020. What is my transition date? Sir, my transition date is 1st April 2022. Yes, I do, Namrata. Yes, 1st April 2022 is the transition date. You tell me, do I have SBP reserve balance on the transition date? Do I have SBP reserve balance on the transition date? No. And because there is no balance on the transition date, because there is no balance on the transition date, will this impact my transaction, my transition? Will this first case impact my transition? Answer is no. No impact on transition to Ind AS. No impact on transition to Ind AS. Are we clear with this? Yes. So in the case of options, in the case of stock options, which are vested and exercised before the date of transition, there will be no impact on transition to Ind AS. You will not do anything because it is closed chapter. Before the date of transition, you have closed the options. Nothing is pending in the balance sheet. SBP reserve to hoga hi nahi. You can call it SBP reserve here. And if you see the guidance note, they call it as stock options outstanding. So stock options outstanding account would not be there. SBP reserve is not there. Exercise does not happen. And therefore, you are having no impact on transition. No impact on transition. Okay. Coming to the next case. Okay. 1st April 15, vesting period is 5 years. So vesting period ends on what day? 31st March 2020. 31st March 2020. Exercise period ends 5 years after that. 31st March 2020. 31st March 2020. Okay. Now, vesting period has ended. Exercise period is going on. Vesting period has ended. Exercise period is going on. So now let us understand. Under the AS regime, we used to record stock options using which value? We used to take intrinsic value. Which was basically the difference between the market price and the exercise price. okay, which is basically the difference between the market price and the exercise price, we would regard it as intrinsic value. We would regard it as intrinsic value. Are we okay with this? Yes. Yeah. Options are vested. So options under AS regime, under AS regime, booked at intrinsic value. Are we clear? Intrinsic value. Okay. What is intrinsic value? Followed under AS, which is nothing but difference between uh, market price and this means price. Intrinsic value is nothing but the difference between market price and exercise price. Okay. So if your market price is 100, exercise price is 60, your intrinsic value will be 40. Your intrinsic value will be 40. And this 40 is the base for employee benefit expense booking. Is for employee benefit expense booking. But you tell me now, under Ind AS regime, do we follow intrinsic value or do we follow fair value? Do we follow intrinsic value or do we follow fair value? Do we follow intrinsic or do we follow fair value? Mansha, Namrata, yes. What do you think? Do you follow fair value or intrinsic value? Others, Prashant, Mohammed. Yeah. What do you think? Yes, we follow fair value. Intrinsic value that was followed earlier was a stationary value, but fair value is a forward-looking value. So Ind AS specifies fair value. So now my next question to you is, will intrinsic value and fair value be the same? Answer is no, never. So if they won't be the same, now you come here. My vesting period has ended on 31st March 20. That means SBP reserve is there. It is there as on 1st April 2022 also, because the options exercise period only is getting over in 31st March 2025. Is getting, what you can say, is getting closed on 31st March 25. That means there will be a balance in SBP reserve. And because there will be a balance in SBP reserve, the SBP reserve was stated under the accounting standard regime at intrinsic value, whereas Ind AS requires it to be stated at fair value. There is a remeasurement gap. There is which gap? There is a remeasurement gap. And therefore, we are waiting for guidance by Ind AS 101. We are waiting for guidance by Ind AS 101. Ind AS 101 gives you two options. First option, go straight back to the period when the options were issued and calculate the fair value on the date of issue of options and bring forward that value and restate the SBP reserve. Restate the SBP reserve. The difference will be taken to the retained earnings. The difference will be taken to the retained earnings. Okay. सर ये तो हम वैसे भी करते थे. Why did I need Ind AS 101? हाँ, now you need Ind AS 101. Why do you need Ind AS 101? Ind AS 101 tells, देखो, whether you use intrinsic value, whether you use fair value, I am not affected because the vesting period has ended prior to transition date. The vesting period has ended prior to transition date. Now, no new EBE will come. No new employee benefit expense will come. आपने रीमेजर करने की सोची. You decided to remeasure. करो remeasure. Where is the impact going to go? Sir, retained earning में जाएगा. So why do you want to do that? You are doing out of academic interest. So therefore, Ind AS 101 comes and says, see, you don't have any expense to be booked. Only exercising is left. Since no expense is left to be booked, that is Ind AS 101 will give you the option that you take the existing carrying value of SBP reserve as the Ind AS 101 value. You take the existing value as Ind AS 101 value. So you have two options. First option, do the remeasurement to fair value and close it. The second option is existing carrying amount. You take it as your value for the purpose of Ind AS and close it. Are we clear with this? Yes. Are we clear? Any doubts? No doubts? Any doubts? No doubts? All clear? Clear, my friends? Yes. So, second option, second case, you have two options. Remeasure the SBP reserve at fair value, take the difference to retained earnings. For this, you don't need 101. Even if 101 was not there, you would do this. Ind AS 101 says, since all expenses that were required to be booked have been booked, you can take the previous gap carrying value. Previous gap carrying value is SBP at intrinsic value. Take it into Ind AS and close it off. You are not going to use. In exam, which option to use? Please make your life simple. You take the option that is there under Ind AS 101. Okay. And last case, my vesting ends on 31st March 2025. And exercise period thereafter is 31st March 2029. Now the question is, here vesting period itself is not over. Here vesting period itself is not over. So therefore, expenses are still to be booked. Hence, the relief that Ind AS 101 gave is not available. You will have to restate the SBP reserve to the best available fair value and then compute the EBE for the balance period after transition. आपको यहाँ पे relief नहीं है. No relief in case 3. Option of relief versus no relief in case 2. Okay. And case 1, transition impact is not going to be there because the options are all exercised. Are we clear with this? Yes. In exams, you will have to use that method which makes your life more simple. Okay. So that's it. The first one is done. We will continue more on day after tomorrow. Day after tomorrow will be a slightly smaller class in terms of time because I have a very important engagement that day, which I came to know. So Saturday, I will extend the class for sure. Okay. Saturday and Sunday, we'll have long class. Sunday to evening class hai, to night show chalega. Okay. So therefore, we will have long classes on Saturday and Sunday with thoda sa I may extend. Okay. But as of now, this is the position for ESOPs. Okay. So with that, we end today's discussion. We will catch up on Thursday will be not a very big class. I'll leave you quite early. Okay. Yeah. Thanks everyone. Thank you. I hope no doubts. Okay. Yes. All right. Last case we'll discuss it day after tomorrow. Last case we will discuss it day after tomorrow. Okay. All right. Fine. That takes care. Okay. For engagement. No engagement. What engagement? Okay. All right. Fine. So that takes care of our this thing. I have an important engagement means appointment. Okay. Not engaged. Kuch nahi hai. Okay. All right. I have an important meeting to attend. Yeah. All right, fine. Thanks everyone, and see you guys on Thursday morning for a short class. Okay? Yeah. Thanks everyone. Take care. Yeah. We'll discuss this in the next class. Okay. ठीक है, Shruti. Thank you. Yes, yes, yes.